Hi, and welcome to Real Estate Today. My name is Ed Cox, and my co-host is Maria Babicki, and we'd like to welcome you to the show. We have a great show planned for you today. We're going to learn with an expert on financing a home. So with that in mind, Maria, could you introduce our guest and get the show started?
Sure. Our guest today is Jan Marsh of HomeServices Lending in Simsbury. She is based in the Simsbury office of Berkshire Hathaway. However, she could help clients who are working with other brokerage firms. So she welcomes your business. Jan, thank you for coming to the show.
Thank you, Maria.
Now, you've been a loan officer for how many years?
I've been a loan officer for about 15 years, actually.
Oh, so you've seen a lot of stuff happen and a lot of
changes in the market, and interest rates up there and coming down and slowly going up a little bit now, but still rates are so good, way below, probably what they expected they would be even now. And it's a great opportunity to buy and even refinance a home if your rates are a little bit higher.
Well, so one of the things about my career in real estate is I got my license when the market just went to heck in 2007. So I've never really been in a market where things are really booming, especially here in Simsbury. But every year I've always been warned that interest rates are going up, and then they don't. But somehow, if we ask that question today about predicting the future, how do you feel about it today?
Well, it's interesting that you should say that, because I'm in the same boat as you. For 8 or 9 years, I've been telling people rates are going to be going up. And, probably 6 or 7 years ago, maybe, we did have a little bit of a spike in rates. We saw 5.5%, 6%, something like that, but they didn't stay there long. They came back down. And the interesting thing is that now we have seen, really in the last 3 or 4 weeks, rates have increased about 0.5%. And that's pretty much across the board: 30-year, 15-year mortgages, FHAs, CHFA loans, and things like that. So rates are going up. I would like to think that they might stabilize here a little bit. I don't really have any crystal balls, but I think they'll probably see another 1/4 point rise before the end of this year. We'll see how that prediction goes, but they're still historically low rates. I mean, the interesting thing is when we bought our first home, 30 years ago, we were all paying 11, 12, 13% interest, and we were thrilled to get that rate. Thought we were just, we're just in Schaefer City, but now rates have been so low for so long that they're probably at a little bit more reasonable point right now.
Why don't we talk about credit scores for a while, because that's so important. So can you tell us about the credit bureaus and like what an excellent score is versus good and kind of questionable?
Absolutely. Credit is really the most important thing. It's key to getting a mortgage. Good credit allows you the options of several different mortgages, perhaps a better rate, maybe less down payment, that sort of thing. There are 3 bureaus: Equifax, Experian, and TransUnion. And when we pull a credit report as a loan officer, we pull from all 3 bureaus. And we look at the middle of the 3 credit scores. That is the important one. We say excellent credit is 740 and above. We can many people don't have credit scores up in the 700s, but 620 to 740 is very doable. We can even do loans down as low as 580, but anything below that is really in the kind of danger zone. You would definitely need to speak to someone like me, get some advice on how to work on improving your credit, and then I would always say to someone, let's talk in 6 or 8 months to a year, see what you can do in the meantime, and we'll reevaluate a year down the road. It takes time for credit scores to improve. for sure.
So the first thing is, if anybody was right now considering buying a home and they know that their credit score, or they assume their credit score is not good, no matter what it is, there are things that they could do within a year to help that score.
Absolutely, absolutely, and it's good to have a loan officer. I believe pull your credit, because those scores, and I can't really explain why, but they'll look different than the scores you're given on your free credit reports, and those are the credit reports that we have to work with and use. So if you have any if you have any delinquencies, you have any charge-offs, things like that, those are the things that you want to address. Another key point to keep in mind is that lenders like to see your credit balance really not more than a third of your available balance. So if you have a $900 available balance on a credit score, lenders would be very happy if your balance on that credit card wasn't more than $300. Okay, that's something to keep in mind, and that, tell you the truth, rarely happens. Right? We see people that are maxed out on all their credit scores, or credit scores, and then or credit cards, excuse me, and then they are wondering why their scores are low. The other most important thing really is to make your payment on time every single month. And we're only talking about the minimum required payment. So if you get your bill and it says, you owe $300, but you only have to pay $50 this month, you need to pay that $50 that on time that month, every single month. That has a big impact on your credit scores.
So people who might be paying their bills every 60 days.
Mm-hmm.
That's
not
bad.
Good. Yeah, that's
okay.
not good. Don't say, "Oh, I only owe $25 this month. I'll wait till next month and pay $50." No, you have to pay it every month on time.
Okay,
it's very important.
Now you said when you pull, you get a mix. So you are allowed one credit pull per year for each of the bureaus. Right?
You are a free credit,
but
pull.
Yours is a blend.
Yes.
So that's a
and
plus.
that's a plus. Yes, yeah. Pulls from all three bureaus.
Okay. And how many credit cards would you recommend someone have? Like, is it not over a certain amount, or?
Well, the more you have, it also depends on your history of credit. So if you have a very good history of credit, it doesn't really matter if you have, 10 cards open. If you have a poor history of credit and you have a lot of cards open, it's going to be a negative for you. It's very good to have 3 or 4 open and active credit cards. And that can be an American Express, it could be a mobile gas card, or it could be a credit card to Old Navy or Gap or something. But the most important thing is that you use them. Not you don't have to use all 4 every single month, but every once in a while buy something, fill your car up, pay the minimal amount, or preferably even the total balance, on time every single month. But to establish credit, it's good. So if you just went into Gap and bought a shirt or something for $35 or $40, and then you paid that off in full that month, and then use the next credit card the next month or something. But you have to keep them open and keep them active. And the reason for that is lenders want to see that you're responsible for the credit that you have, for the debt that you have, that you can manage your credit and manage your debt. And that's what influences credit scores.
Okay.
There is, we don't have to get too technical, but 35% of the credit score component is based on your payment history. Do you pay it on time, or are you late? 30% is the outstanding debt that you have. So compared to your credit limit, when I talked about your balance compared to your credit limit, 30% is based on that. 15% is based on your length of history of credit. So the longer you have open and active credit cards, the longer history the credit card companies have, or the credit reporting agencies have for you, and that will influence your credit scores as well. And then 10% is your interest in obtaining new debt. If all of a sudden you open 3 new credit cards, in the same month, that's, even though I say keep them, open them and keep them active, if you're applying for new ones, it's going to indicate to the credit bureaus that you must want to be going out and making some big purchase or something. And a lot of times that can have a negative impact on your scores as well for a while. And the other 10% is the type of credit you use. So we have installment loans and we have revolving credit. Installment loans are loans that have the same recurring payment every month, like a car payment, for instance, a mortgage. Okay, those will have a different impact on your credit score than regular credit cards like Mobile, Gap, J.Crew, whatever, and the debt that you have with them.
I remember my wife and I, when we met with our financial person, and I don't know what we were doing, but they must have had our credit. And what happened with us, we were the reverse. Our house had been paid for. We didn't have car loans, and we rarely used credit cards. And we were advised to exactly what you're saying, is because our credit score was quite good, but I expected that it would be
better.
It would be even better because
you had no debt.
But we had no debt, but we didn't use credit cards.
Right.
We fixed that by using credit cards, but paying off the balance at the end.
Yeah.
And our credit score did increase.
Right. Right.
So.
Yeah, a lot of people will think, well, I don't have any credit cards because I'm very responsible with my debt every month. I pay cash for everything. But then there's no history of your ability to manage credit. And that's what mortgage companies look at.
We still were writing checks.
Yeah, still writing. Imagine that.
I know one thing that makes people nervous are appraisals, because you just don't know how it's going to come back. What are you seeing with that? Are they coming in well? Or?
I'm actually seeing very good things with appraisals. We really have not had any problems with appraisals coming in lower than expected. In fact, on several occasions, we've been pleasantly surprised with $30,000 or $40,000, $50,000 more than we thought the home was worth. So I think that appraisals are very accurate now in terms of the value of the home.
I think in Simsbury, we've kind of found that property values are not on the decline. So homeowners, we're not expecting that the house to be worth less 3 months from now. Would that be?
I think that you're absolutely right about that. Yeah, I think we've seen a little bit of an increase in value of homes here in Simsbury.
Right.
And the surrounding towns.
Right.
That's always a nice thing.
It is. Yeah.
And I think also one thing that happens is it's easier to find comps when there are more houses sold.
Right.
So 4 or 5 years ago, we sold 140 houses for the year. Now we're selling almost 300,
right,
or maybe even more than 300 this year. So then there's more comparables, so appraisers can do their job easier.
Right. I would agree with that.
How about 30-year versus 15-year mortgages? What are you seeing with that? And what are your thoughts on that?
Well, that's always a good question. First of all, you have to be able to afford the payment on a 15-year if you're considering it, because it could be, $500, $600, $700 more a month, depending on the price of the home, than a 30-year. People have really very different thoughts about that. If you were to get a 15-year over a 30-year, you really would save yourself thousands of dollars in interest, over the course of the loan. I mean, you could save yourself $200,000 of interest over the 30-year or 15-year life of the loan. So I certainly would never discourage anyone from getting a 15-year mortgage, but there is something to be said about a 30-year. You can always add to your payment every month whenever you want to, and you just let the lender know that you want to put this additional money towards your principal, and you can you can always increase your payment, and that will lower your term as well. So if you have a 30-year mortgage, and say your payment is $1,600 a month, as opposed to a 15-year mortgage that might be $2,200 a month. If all of a sudden something happened in your family, you ran into a little bit of a difficult period of time, you don't have to make that higher 15-year payment. You would still have to make your 30-year payment every month, but you don't have to add to it either. So there's different thoughts about it. It kind of depends on what you want, your lifestyle, what you feel comfortable with.
As for mortgages now, like the one thing is that there's a full menu of different loan opportunities for people. So someone who is a first-time home buyer, you had a class you sponsored for us for CHFA, so
Right.
that would be someone who might not have might have good jobs and be able to make the loan payments, but they don't have the down payment.
Yes.
Can you tell us something about that?
Yeah, absolutely. We actually have many different CHFA loans.
And are those Connecticut?
Those are in Connecticut, yeah.
Right.
Yeah. Connecticut Housing Finance Authority. And they grant loans to people who have, it's really across the board. You can have perfect credit or you can have weaker credit and still qualify for a CHFA loan. We call them first-time home. Some of them are first-time home buyer loans, but it doesn't mean that you can never have owned a home in the past. It just means that in the last 3 years you haven't had any home ownership. So if anyone, 4 years ago you owned a home but you sold it and you came back and decided you wanted to buy a single-family home or a condo, you could certainly qualify for this first-time homebuyer program. The nice thing about those are the rates are really the lowest in the state for our 30-year fixed mortgages, which makes them very attractive. The fees on them are a little bit lower. They close perfectly normally like any other conventional loan. There's nothing negative about having a first-time homebuyer or a CHFA loan or an FHA loan. And there are only a couple of restrictions. There's an income limit restriction, depending on how many people are in your family living in the home. And there's also a purchase price limit as well. So those are the only two things that we take into consideration. The nice thing is that if, say, a couple comes in to purchase a home with me, and they are interested in getting a first-time homebuyer program, if together they make too much money and so their income exceeds the limit, we can always use the income of one of them. And if one will qualify without the other, even though two people are going to be living in the home and obviously those incomes are going to be combined, you still qualify them on the person who's actually going to be on the mortgage. So they're wonderful programs. And they're easy to qualify for, very easy to do, and they're always, if someone fits into those parameters, they're always the first ones that I'll look at.
Is there something about a down payment assistance on that too?
Yes, there is. Good point, Ed. On these first-time homebuyer programs, there's something called DAP, which is Down Payment Assistance Program, and they're as close to 100% financing as you can have. Because in that DAP portion, you can finance your down payment, which only has to be 3% of the purchase price of the house, and you can also finance your closing costs. So if you're buying say a $100,000 home, just to keep it simple, you're going to be putting down $3,000 that you might not have, and your closing costs are going to be somewhere between $5,000 and $6,000. So together, that's what is that, $8,000 or $9,000 that you might not have, and you can finance that in your loan with a second mortgage at the very same low rate as the first, and still amortized over 30 years. It's a wonderful opportunity for people to become homeowners.
I think you were explaining that it's one payment.
It's one payment.
One payment. It's not like you have to keep track of two different bills. Right.
Well, we were
So-
both in attendance for the program you hosted for agents at the library
Yeah.
about CHAFA, and I thought it was very generous.
Oh, it's very generous.
Yeah.
It's really, they're such great programs. Ed, let me just correct myself there. There really are two different payments.
Oh, they are.
First mortgage and second mortgage.
Okay,
but
okay.
but they're at the same rate. You know, typically in years past, if people had a first and a second mortgage, there was always an additional, a bump in the rate on the second mortgage. But that's not true with these. And there are lots of different programs. There are special programs for police, teachers. Who live in the community that they're teaching in, if that community fits into the special program, and also teachers who teach special courses can qualify for first-time homebuyer programs at even a little bit reduced rate than other first-time homebuyers. So.
Another loan that we were discussing just before we started the show was a potential client or clients that I have. You know, we've been looking at homes and their budget is set up, and they would like to buy the home and have maybe do the kitchen, but you know they're going to spend all their money to buy the home and get it, so they're not going to be able to. Is there a loan available for them to do that with?
There is. Actually, we have loans called 203K, FHA 203K rehab loans. And what those loans do exactly what you're saying. It will actually give you the money that is needed to redo your kitchen, your bathrooms, add a garage if you want to, that sort of thing. And it's all, again, easily done. Takes a little more time because you have to be working with a licensed contractor. Right. The contractor is going to put together all the plans and specs of the program. FHA advisors are going to come in, look over everything, make sure it's approved, look at what you need for your the cost of goods, the labor, and all of that. But once you get all that set up ahead of time, it goes very smoothly. And in the end, if you need $25,000, $35,000, $45,000, $60,000, whatever it is that you need, you can get in this loan.
I just find that clients today want the HGTV house that they see on TV, but those homes are priced out of their price range. But if they could moderate a little bit, they might be able to do it.
Right.
There's so many nice opportunities out there if you're creative and, you know, if you can just see past maybe a dated bathroom.
Yeah, absolutely. Yeah. Colors are, not granted in the kitchen or something. There's many opportunities, believe me.
Yes.
Yeah.
The other question I have is timing these days. Like if someone were to be interested in purchasing a home, would you say 60 days is what it might take? Or
Yeah, Ed, we can close loans in 30 days if people are ready to move in 30 days. Not a problem with that at all. But typically, it's probably about 45 days. Yeah.
And
a rehab loan, a FHA rehab loan would take a little bit longer than that.
But the one thing also is that I think you were telling us the other day is that there's a way of coming in and speaking to you and getting pre-qualified or pre-approved.
Pre-approved, yeah.
And when you have a program, at one time we had a name for it. But I mean,
right.
If someone were thinking about buying a home and you did all the work and had them all set up, they would be in a very powerful position to be able to buy a home.
They would be. Ed, that's a good point. We do have a program where before you even find a home that you want to buy, I collect all of your information and all of your documentation, tax returns, W-2s, pay stubs, and bank statements. And I can send them into our company to an underwriter, and they'll take a look at everything, and they'll give you an actual pre-approval before you found a home. And the biggest advantage to that is if once you do find a home that you want to make an offer on, if you have already been through the system and looked at all of your documentation, all we need to do is request an appraisal of that home, and once we get a satisfactory appraisal, you're all set to close. So the people who are selling a home I would think that they would be much more inclined to take your offer rather than someone else's offer, because that other person is going to have to wait 30 to 45 days to be approved. And that is a very anxious time for sellers of homes.
So the sooner they speak to you,
The better.
the better.
Yes.
And that doesn't force them to have to buy a house.
Absolutely
It just
not. And there's
prepares
no
them.
cost to it whatsoever.
Good to hear.
Totally free.
What about these online mortgage companies? I think there's a benefit to seeing someone face to face.
Yeah, I would definitely agree with that,
Yeah.
Maria. That's what we want, of
Yes.
course. There are several different online companies, but I think the thing that I would have a problem myself using one is I'm sharing all of my very personal information. My birthday, my license information, my social security number, to someone who's up there in the cloud somewhere. I'm never going to meet that person, never going to be able to see them, and most likely never even get the same person on the phone, if I even get someone on the phone, once the process starts. So, I like to tell people that I'm right here. I live in the area. I work right here in Simsbury. I'm going to be seeing you in the grocery store, Starbucks, whatever, and I will always do the very best for you that I can. And the nice thing about working with us is that we work together. We're actually in the same office. If you have clients, I'll know where their loan is every second of the process, and so will you as a result. And I'm always reachable.
The other thing, too, is that even though you're in our office, you don't have, a list over there of who you're lending things to,
No.
or who your clients are.
Right.
The one thing is that you have a locked private office.
Right. Absolutely.
Once they start talking to you, it's a private conversation, and so it
Yes,
isn't.
all your personal information is
Right,
kept
and that's-
very
right.
private.
Right.
Absolutely.
And so even though we're the real estate agent, we only know what we're entitled to know. And in fact, I actually don't want to know. You tell me how much they can spend and I'm good to go.
Exactly, and that's what I do. Actually, you'll have your clients come to me, and I will pre-approve them and let you know what they're going to be comfortable with purchasing and spending each month.
Well, I think we try to keep things as seamless as we can, but it is an anxiety-provoking thing when you're purchasing a home, and it's just so nice to have, you have a very nice way about you. And I
Thank
think,
you, Maria. I appreciate that.
It's nice to feel comfortable.
Right,
Yeah.
and that is the most important thing.
Yeah.
We want to keep it as smooth and as stress-free and as nice a transaction as possible.
Yeah.
So we're getting near the end of the show. So
Yes, we are. And is there anything, as we conclude our discussion, that you'd like to summarize to the viewers?
I think just to stress to you the importance of credit. Good credit is very important. Make your payments every single month, on time, every month. And then the next, I think, important thing is to contact you, Maria, Ed, me, and together we work as a team, and we will pre-approve you for a mortgage, let you know what you're comfortable with spending, and then go out and buy.
Okay. Well, thank you for coming on the show. It was a pleasure to talk to you, and I'm sure very informative to our viewers. So thank you.
Thank you for having me. Appreciate
And
it.
thanks for watching our show again. We appreciate it, and we'll see you next time.
Thank you very much.
Funding for Simsbury Community Television is provided in part by contributions from viewers like you. Thank you.